Welcome to Market Matters. I'm Khoo and I'm joined, of course, by Sulhi Azman. Let's talk about companies in the news. And it's Scientex Bhd, this plastics maker and property company. They closed the day up 6.5%, max to 9.15. Now, this is a stock which has been up by 35% since early February. Now, this is one of the world's largest top three producers of industrial stretch film, and they export to over 60 countries around the world, which I guess basically explains part of the reason why their shares have been rising by so much.
Yeah, you talk about the beneficial of US dollars, and also as a trade, it's done in greenback. Anyway, it's also leading player in manufacturing. They're doing some PP or polypropylene strapping band. Sorry about that, just throwing on there. Besides, also manufacture solar products and also automotive items. And I think, Chuang, today they announced the very first quarter results for financial year 2016. How does the result look like?
Fantastic, actually. In terms of the first quarter revenue, by 28% to the good 551 million ringgit max. Net profits are about 60 million ringgit on that, about 101% higher from a year ago. But the margins are amazing, better than 10%. And this, of course, blended across the property business, their solar business, their car parts business, and of course, they've also got a very strong property arm in terms of 2,000 acres of land.
Yeah, in Johor, in Malacca.
In southern Johor State in Malacca, yeah.
Yeah, I mean, if you look at the balance sheet, right, both they said that both business, manufacturing and property show stellar results, where the manufacturing activities, the profits more than double, actually 2.5 times up due to the better margin that they have managed to chalk, while the property development recorded better sales with profit jumping 48%. Now, Chuang, if you look at the company, right, they are actually in the manufacturing line. They have quite a number of interesting things, automotive components, right? They have seats, sun visors, and panels, and so on. And I think they have supplying to quite a number of car companies. I saw from their websites, Protons and Fords and what have you.
Exactly. They've got 9 manufacturing facilities in Malaysia and Vietnam. And of course, I would presume that Vietnam takes care of the lower cost, lower margin business. And Malaysia takes care of the higher margin stuff. It's quite an old company, established in 1968, listed 22 years after that in 1990. I think recently, 3 or 4 years ago, they bought GW Plastics Great Wall. So they've been, growing both by organic means as well as by acquisition. So, of course, when I looked at the first quarter results, 27 cents per share, both manufacturing and property did really well. Manufacturing actually more than doubled, 2.5%, 2.5 times due to better margins. I think also the US dollar doesn't hurt. And the property development side recorded better sales. Profit jumped by 50%.
Yeah, if you look at the, still concerns, if you look at the borrowing at 300 million ringgit, but I think, because they're in capital-intensive business, they might need a lot of capitals for to be used for working as well as the capex, and also, but cash flow is at 80 million ringgit, sorry. But certain borrowings are, of course, denominated in US dollars, 31% of that, and Japanese yen also. So, we talked earlier, some companies which have large borrowings in US dollars, they may need to restructure.
Okay, so to take it all home, Max, Scientex Bhd announced stellar quarter one results where net profit doubled. Secondly, they had a great performance in both the key manufacturing and property segments, and it is also one of the world's 3 biggest producers of industrial cling film. Let's move on to Broker's Call and Gamuda Bhd, that construction giant. Now, they closed the day unchanged at $4.40. This is a stock which has not really done as well as the other manufacturers because their stock has dropped by about 17% since March. Had a bit of a rebound since mid-August. They had their first quarter earnings announced yesterday. Not too good. I think net profit is down by about 13% to 162 million ringgit. All 3 core divisions of construction, property and toll highways all dropped in tandem with the economy. Order book is just about 800 million ringgit. But this is supposed to be a transitory year for Gamuda 2016 because the year after that in FY17, they're going to see order book rise by as much as 7 times, according to the analysts.
Yeah, today the broker's report was brought to you by CIMB and also GFFX. CIMB is maintaining at call with a lower target price of 543 per share, while GFFX is maintaining hold with a lower call of 4.88. But Chuang, who wouldn't like Gamuda? They have interest in many businesses, infrastructure, concessionaires, and also property development, and I think in the order book, as you mentioned, right, they are going to be seeing a lot of coming in from the MRT Line 2 as well as the LRT 3 and also the Pan-Borneo Highway. All of these are going to be news flow items coming in 2016. Yeah,
hope and pray, because obviously there's going to be some kind of success rate there. Of course, that's on the construction side. On the property side, I think in Q1 they booked sales of about 270 million ringgit. Unbilled sales are down slightly to 1.2 billion ringgit. but they've set a whole year sales target of 1.3 billion ringgit for F16, and they're going to have 4 property launches to buffer that whole business, totaling about 3.7 billion ringgit. The third key segment for them, the toll highway business, not too good, because we saw the whole toll rate increase, and that's of course hurt demand on toll highways.
Yeah, I mean, everybody's talking. I mean, they experience about toll hike between 31% to 100%. Now, I take Smart Tunnel, and Smart Tunnel is apparently managed by Gamuda, and it used to be 2 ringgit, now it's 3 ringgit, and clearly they are going to see a lot of cash coming into their coffers, but they also have to deal with these volumes dropping 3 to 8%, but I think it's going to normalize, right, in between 6 to 12 months' time.
Yeah, well, I think that's the hope and prayer is all there. So where CIMB is concerned, they reckon that Gamuda's an ad call still, but with a lower target price of 543. I guess for them as well, the one other big possibility in terms of going ahead is the Penang Transport Master Plan,
which is of course
exactly that's under evaluation by the powers that be. So hopefully that 10 billion ringgit job will go ahead for them.
Yeah, and I think, I think they're planning to do some LRT projects there in Penang as well, and you also have this Gemas JB double tracking project, which is going to be coming in good for them. And talk about the water assets, this new valuation for the 40% owned splash, which sometimes in second half of 2016. I think this is going to be part of that would be, a boost, or something that could be exciting for Gamuda. Yeah.
So just to add as well, GF Apex's call for Gamuda is a hold maintain, with a lower target price of 488. So to take it whole home and to summarize where Gamuda is concerned, where the analysts are, they just reported lower quarterly earnings due to poor contributions from all 3 key segments, which is construction, property and toll concessions. Secondly, they see analysts 2016 is a transition year with order book to expand by 7% in FY17. So that's a wrap for Gamuda as well as for Scientex. If you want more, go to theedgemarkets.com, or all good news stands will carry a copy of the Edge newspaper. Thank you for watching. Good night and good luck.